Wrap up for the week. Mortgage rates uh, definitely approaching new highs. Let's put some context in it. Is the rates running out of control? Is it going to stop housing sales, cause a crash, or is it just a blip in the market? Well, I don't know the future, but let's take a look at the actual data of what's happening right now. So yesterday, the mortgage news was mortgage rates inch back up towards Tuesday high. And if you read the detail at the end of business yesterday, rates closed at 4.75%. Again, towards the rates they bumped up on Tuesday, starting off the week. Well, those rates didn't hold. We actually jumped up now to 4.95%, just below 5%. So, what does that mean? You can see from the beginning of the year where rates have gone almost straight up. And in some regards, that could be very alarming. If you look at the rates in context, let's say over time since 2017, those rates are again approaching the highs we had back in 2019 and 18 towards the high numbers of the past years. So really we're approaching kind of the highest rates of the last 5-year period, slightly over 5%. Of course, back then when it hit that, it came back down. But take a look at the numbers over history. You can see that today we're on a long-term downtrend. When I started in the business in 1986, rates came right down below 10%. We've had this long 18-year, how long have we been in business? Wow. 14, 30-year run. Anyhow, this long 36 years, long run down. And if you look at it in context, rates are still low by historical standards of the last 30, 40 years. However, look at it in the context of the last 5 years, we're back towards our highs. So, what does this mean to us? Well, number one, if you're in escrow, pay attention. If you have a rate lock and it expires, it may cost you a lot of money. If you're a seller and your buyer's rate lock expires, they may have to back out of the deal. So, if you have a rate lock at a lower rate, it's very valuable. It's like free money. You got to close it right now. If you have buyers who are not locked in, you need to make sure that they get in and get those contingencies waived, because absent that, there are buyers who are going to look to back out of deals because of the increased payments or going to ask for concessions. This is where you need a strong agent to negotiate the deal and get it closed for you. So that's number one. Number two, though, I would say in a long-term context, take a look at the where we are historically and realize when you buy a property, you're paying cash flow for an asset. If it's someplace you can live, you're locking in where you might want to live for 10, 20, 30 years. Can you afford that payment? If so, over time, it'll work itself out if there's no other alternatives. What you don't want to do is buy something you can't afford. What you don't want to do is buy something speculating that you can resell it next year for a profit. So if you can buy a property now and the numbers make sense, for sure lock it in. If you can't afford to do that, be careful. And if you have an escrow right now, you got to do whatever you can to get it closed. This is Friday afternoon. I'm not sure where things are going to open up on Monday or how even they finish up the day today. But it's worth paying attention. If you're in escrow right now, double check where are you? You're locked in. Is your buyer locked in? If no, get it locked in. If it's not too late, and if it's too late and now they're looking at these new rates, get them locked into the contract. I'm Bill Gross. I'm here to help. Call me